Yeah, sure. So Broadridge is a global fintech, right? We're an S&P 500 company, and we provide essential infrastructure that powers investing, governance, and communications on a global basis.
And so, in terms of Hashnote being on Canton Network, like this is exactly the type of synergy that you kind of need to have happen for us to really get to the point where you're addressing a $50 trillion market, right? I know that you guys have done, you're saying $2 trillion in repo, sorry, $2 billion in repo volume every month now.
No, it's trillion. We do 50 to 100 billion a day. Broadridge is here in the room.
Guys, like that's an amazing number. And if you told me, 2 years ago when I was, or sorry, 4 years ago when I was on a repo desk, that there'd be a blockchain moving trillions of dollars in a pretty efficient way, I'd tell you, that sounds a little crazy.
So our solutions are helpful to banks, to broker dealers, to asset wealth managers, as well as corporate issuers in terms of allowing them to innovate, to grow, and to operate. And just in terms of that, what I would highlight is our company really sits at the intersection of financial services. And that's why it's really important, right? By sitting at the intersection of financial services, we power a global network that connects about 10,000 corporate issuers with about 330,000 mutual fund and ETF providers, about 1,000 broker dealers with about 200,000 financial advisors, about 120,000 institutional investors, and about 170 million retail investors. So we think about all these critical stakeholders in the global financial services ecosystem. They're all connected through our network, right? And so what that means is, I'll give you some numbers, 15 trillion. That's the number of average trading volume per day that we support across equities, across fixed income, and across other securities on a global basis, 15 trillion per day through our platforms. Another number is 30%. That's the percentage of US wealth advisors that use our platform for front office solutions. 20 out of 24. That's the number of fixed income primary dealers in the US that support our platform. And 7 billion. That's the number of communications that we generate each and every single year across financial services. So it just gives you a little bit of a snapshot as to why our company is so important and so critical at the junction of financial services. Unlocking sort of collateral, right, is what drives liquidity. Liquidity sort of is then what drives sort of financial activity. Repo is one of the very first areas that we focused on. And we saw liquidity as sort of one of the key sort of use cases that can benefit from tokenization. And so we released an application a couple of years ago called Distributed Ledger Repo, which essentially is focused on tokenizing sort of repo agreements in order to sort of enhance velocity and drive more capital efficiency. And that's something that we have just seen sort of grow and grow substantially to the tune of 380 billion, right, in repo transactions tokenized per day. So it's been a pretty significant success for us. It's probably sort of the largest sort of tokenization platform on the planet. And it's really sort of facilitating sort of global, capital markets.
All right, so this is Soto Sanchez from Broadridge Financial. This is posted just one day ago. Shout out to the CYPRX researchers for this podcast. But long story short, he pretty much just openly talked about how the biggest tokenization platform for repo markets runs on the Canton network.
It's probably sort of the largest sort of tokenization platform on the planet. And it's really sort of facilitating sort of global, capital markets.
I'll go back a couple of minutes where he goes on to say this, and then I just want to break down just some Canton information, and then we can I have another podcast that I want to run through, but I want to talk about some things that we were discussing in this community on Canton, and then we'll go from there. So just take a second and listen to what he says here.
I think number two, given sort of how quickly things are evolving in this marketplace, we're also very much focused on sort of solutions that sort of help to sort of redefine existing workflows, but for a digital asset future, right? So what's the workflow for a wealth manager or an asset manager or a broker dealer, right, on the digital asset side, right? Because the workflows are going to change. It's very different. And so like, how do you support those workflows? I think that's extremely important as well. And then sort of another aspect that we're very much focused on is this interoperability aspect that I mentioned beforehand as well, right? So we're members of the Canton network, which is a public permission network. And so our distributed ledger repo solution runs on the Canton network. And so we do believe that interoperability, especially something like Canton, which is sort of purpose-built for financial services, right, to deliver the security, the privacy, sort of that we all require, is the kind of solution that we're going to start to see sort of across the marketplace to just facilitate that, get folks on that common network as well. And so I think those are some of the things that we're going to start to see. Again, if you put that connection back to what I mentioned beforehand, is like, all right, let's start attacking the challenges. Like, what are the challenges to sort of fulfilling the potential of this? Regulatory clarity, it's on the horizon, right? We're gonna check that box. It's gonna take some time, but we're gonna check that box, and we need to check it on a global basis, because even things like cross-border transactions, right? We need sort of better alignment on a global basis. But regulatory, okay, check. Technological issues, which are highlighted, hey, we're working on those as well, right? Operational model challenges, that's what we're working on now. And I think every institution sort of like, what is my operating model in terms of this on a go-forward basis, right? Number 4, what are the specific solutions that you're going to offer your clients, right? So if you have clients who are wealth firms, like, what are they looking for, right? Based on our survey, custodians, asset managers, wealth managers, they're all going to be increasing sort of their activity in tokenization. So what is it that they need? How can we be helpful to those clients as well? So these are all things that we're keeping sort of top of mind on a go-forward basis. But what's also very clear is that things are moving very, very quickly. It's exciting for us. We are big fans of tokenization, but it's also exciting just to see the level of change and try to keep up with what feels like new developments happening on a daily basis. But I think it's because a lot of folks are excited as well, right? Just seeing sort of the impact that this can have on financial, markets infrastructure in a very, very good way. There's no shortage of areas to focus on in terms of like what the crystal ball is. But I do think, we're really focused on addressing the challenges, because this is not just concept. This is becoming a reality.
Mm-hmm. And keep your running shoes on, because it's not going to slow down.
It's not slowing down at all whatsoever. If anything, it's probably going to pick up steam. It's going to accelerate, and we're ready for that.
Yeah, so that was a really, really great podcast, in my personal opinion. Very intellectual.
And the transparency around Canton Network is just like it. I love hearing it. Like they're not shy. They're letting us know, like, yeah, we're running on Canton Network. I feel like with other projects, there's like, NDAs in place, and we don't really hear too much. But with Canton Network, there just seems to be a lot of transparency and a lot of openness. We're running on Canton Network. I love hearing it. Makes me more bullish on Canton.
I think something that I like that he said is just that we're kind of like in the early stages. And he said that over the coming months/years, this is going to pick up at a very granular pace, in a sense. And that leads me into something that I streamed the other day on this podcast here, where this gentleman, I think his name is Hasib Karishi. I'm not too entirely sure how to pronounce his name, but he just goes on to talk about how people think, because altcoins have been pretty much obliterated over the past consecutive couple of months, that altcoins are dead. And if you feel that way, sell your crypto and get out. Like, this space is not for you. Altcoins are not dead. We're just in a risk-off mode right now in crypto. And so if you're here in this market right now, just because of price appreciation and not the underlying technology and the longevity that this space has to offer to investors on a global scale for 2030 and beyond, then, step out of the market, sell your bags, go back into fiat, go back into traditional finance, and, that way you don't have to complain about the current conditions. So just listen to what this guy says, because it just goes hand in hand with what the Broadridge gentleman said. Like, we're still building, we're still partnering, we're still tokenizing, everything's still happening. Banks are going to need to integrate this. None of this is slowing down. It's just that the regulatory environment isn't fully clear yet. There's still a whole bunch of uncertainty still lingering in the market, which some we'll talk about today. But just take a second and listen to what this dude says here.
Remember, a couple months ago, there was so much negative sentiment going around on the internet about crypto. There were all these people talking about quitting the industry, people talking about, hey, we haven't built anything of value. I'm done. This whole thing is just this worthless casino. And one of the things I said at that time is that this is good. This is good. Why is this good? This is good because if you have lost the ability to fight in this war, then you need to be sent back home. Because the only way that we are going to be able to win the war, that the crypto industry is fighting against the legacy incumbents that it's been here to take on from the very beginning. The only way it's going to win that war is with a spirited and determined set of warriors willing to fight. And if you are done, if you are checked out, if you are disillusioned, it's tough to say, but it's time for you to check out. It's time for you to go. And only when those people who are disillusioned have all left can the industry actually start to recover. So those people who say, oh, I don't believe in this stuff anymore. I finally capitulated. I finally sold all my tokens. Great. The only way the industry can move on is when you are finally done selling. And so I think that actually was a very necessary reset for the industry, is the people who didn't really have conviction, when they saw the fundamentals looked amazing. The regulatory position of crypto, stablecoin growth, Bitcoin's acceptance and ascendancy as an asset, like the institutionalization of all of the concepts that we've been preaching for years, all the fundamentals of crypto have looked amazing. And the prices were stagnant. And if that was enough to get you to say, I'm done, we didn't build anything valuable because tokens didn't go up, then get out of here. Like, you're done. You're checked out. We've gotten as much use as we're going to get out of you. But everybody else who's left needs to focus and build for crypto to be successful.
Yeah, so I just really like that mentality, bro. Like, put all the naysayers to rest. Like, if you're upset right now because the token that you invested in isn't performing too well, then, get out. You're not focused on what's really being built. You're not focused on the transformation of the financial system and how long this was actually really going to take. You're probably believing bullish moonboy hopium that got you excited and misled to believe some high-end price prediction was going to come into fruition, but they didn't really teach you how to read underlying fundamentals and risk off parameters properly. Like, sell your bags, get out. The space is not for you, right? Put it to rest.
Facts, bro. Facts. No, he said it perfectly.
I want to touch on this because, since we're on the topic of Canton, I want to talk about the price action in today's video breakdown. We have now recently come into one of our institutional dark pools that we had been talking about on the CYPRX platform for some time. So I just want to give you guys and our audience an update on that. And then I want to kind of talk through the fundamental backdrop, reading thoroughly through our fundamental report real fast, just so the way our audience has an idea as to why the total cryptocurrency market cap is down over $30 billion on the day today. We're starting to retrace from the weekly highs, kind of taking a look at the sentiment, even though the fundamental backdrop in the crypto ecosystem is super bullish, right? For example, just the other day, here was another bullish fundamental on Canton Network, January 15, 2026, LSEG, London Stock Exchange Group, launched Digital Asset Settlement House using blockchain tech to enable faster 24/7 settlement between payment networks. And if you come over here to this post directly from Yuval Ruz, he reposted this. He said, Canton Network becoming the place for institutional settlement. Excited for this new partnership. We can go ahead and we can click on this link and we can read thoroughly through it. It says, the new digital settlement house, LSEG, DISH, is an open access platform which enables programmatic and instantaneous settlement between independent payment networks, both on and off chain. Through commercial bank deposits held on the DISH Ledger, DISH Cash, the service will enable 24/7 instantaneous movement of commercial bank money in multiple currencies and jurisdictions, PVP and DVP, providing a real cash leg for FX and digital asset transactions and settlements. DISH Cash will operate accounts at commercial banks, providing members with instant ownership of commercial banks, deposits at any bank within the network, and a mechanism for 24/7 movement of commercial bank money. LSEG or DISH can facilitate settlement on its own ledger or act as a notary for settlement and other networks and assets. The launch follows a successful proof of concept in collaboration with Digital Asset and a consortium of financial institutions completing transactions on the Canton Network. Deposits were tokenized on the Canton Network for use as a true cash leg of the transactions. Daniel McGuire, group head at LSEG Markets and CEO LCH Group, says, LSEG DISH expands tokenized cash and cash-like solutions available to the market, and for the first time offers a real cash solution tokenized on the blockchain. I like that. It says for the first time, right? So for the first time they're doing this, and what network are they doing this on? The Canton Network. For the first time, it offers a real cash solution tokenized on the blockchain utilizing cash in multiple currencies held at commercial banks. This innovative service will enable users to reduce settlement risk and integrate existing cash securities and digital assets across new and existing market infrastructure. Now, what I really like about how you just said, Aqua, is that, you know, Canton is very transparent. They talk about all the time that they are in the proof of concept mode. They're in the testing phase. We're still running POCs. We're still partnering. We're still building. We're still growing. And I'm pretty sure I have a podcast of someone from digital asset talking about that. We'll get to that in a second if I can find it in my notes. But nonetheless, you will see people read these articles and be like, oh, well, why is price action performing horribly? That is why it's so important to not only pay attention to these fundamentals so that you understand the underlying infrastructure is still being built out, but also tapping into a community like ours here at CYPRX so that way you understand the risk off backdrop, and that right now you as a retail investor are investing in an asset class that these financial institutions that do have exposure to this space don't want exposure to when the market environment is risk off, right? And that is exactly what we're currently living through. The market sentiment, due to a whole bunch of macro fundamentals, is risk off, and we update not only our private community, but you guys publicly on this information on a daily basis. So real fast, just taking a look at our recent update on Canton Coin. This was back from 3 days ago. You guys can see the date down here. Canton's price when we released this was trading at roughly about 14, almost 15 cents, give or take. And we had talked about a possible retracement if the sentiment flipped the risk off back to the downside, with our first bearish target here saying to the downside on our radar is, of course, a retest of the dark pool at the 0.12257 psychological level. If sellers were to gain the upper hand and break below that, we would likely see a pullback down below that to the 9.453. But again, sentiment as of time of writing does not support an aggressive bearish move. So what we're doing right now is we're keeping it on our radar as a possibility with alarms set to take advantage of any discounted prices that may become available. And we talked about later this week, we still need to pay attention to how sentiment progresses, pay attention to US inflation and economic data, unemployment claims, Fed speakers, announcements on the next Fed chair, Congress and tariff updates, geopolitical uncertainty creating demand for safe haven assets, crypto regulation updates, and yen strength or currency interventions, right? So we talked about all the things that could create a risk-off backdrop days in advance for you guys to understand, to keep on your radar. Now, fast forward to today. Let's talk through why we're seeing this risk-off backdrop, why we've seen Canton price pull back, coupled with the total cryptocurrency market cap also shedding some of its weekly gains, coming in at a weekly low of 3.04 trillion and a weekly high of 3.28, down roughly about $25 billion on the day, not holding this rally from the beginning of this week starting Monday, and starting to likely pull back. Depending on how the sentiment continues to progress this weekend, let's just take a look at that real fast, right? So today, the total cryptocurrency market gave back a portion of its weekly gains, sliding roughly 25 billion on the day and trading near the $3.1 trillion level. While price remains above the weekly low, around 3.04 trillion, the broader market is once again being reminded that a sustainable rally requires more than short-term momentum. Several macroeconomic and geopolitical forces are resurfacing that demand caution before traders get overly optimistic. The primary pressure point remains U.S. economic data, which continues to signal that inflation has not fully cooled and that labor market conditions remain resilient. Together, these factors are pushing back against expectations for imminent interest rate cuts from the Federal Reserve. As Kyle Rota, analyst at Capital.com, noted in a recent data report, shows there is no urgency to cut interest rates, reinforcing the market's recalibration of rate cut probabilities. On top of that, we also have had recent inflationary pressures resurfacing. The latest Producer Price Index, or PPI report, underscored that inflationary pressures still remain present beneath the surface. I'll stop right there. I won't bore you guys to death with all the data and the statistics. On top of that, we've had tariffs add another layer of inflation risk. Adding to inflationary pressures are President Donald Trump's sweeping tariffs on import goods. Recent data suggests wholesalers and retailers are absorbing much of the cost for now, shielding consumers from immediate price shocks. However, that buffer may not last indefinitely. Samuel Toombs, chief U.S. economist at Pantheon Macroeconomics, noted that retailers are currently absorbing tariff-driven price increases, but persistent cost pressures could eventually spill over into consumer prices. The latest PPI data offers a glimpse into how businesses are navigating these higher input costs, and it reinforces concerns that inflation could reaccelerate if trade tensions intensify. And we're seeing those dynamics play out right now with Greenland, the whole entire debacle with the EU and NATO and the US, right? We'll get to that in just a second. This week, we've also seen yen intervention fears. Remember, this is now our report from January 16th. What did we discuss 3 days ago would be something of concern that would create a pullback in market sentiment, yen strength, or any currency interventions right here. Now looking at today's report, beyond US data, global macro risks are also weighing on sentiment. The Japanese yen has weakened to its lowest level against the dollar in 18 months, triggering renewed fears of currency interventions. Japanese Finance Minister Setsuko Katayama, probably butchering that one, and top currency official Memuro both issued warnings to currency speculators stating that authorities would not rule out a direct market intervention if moves become excessive. Following their comments, the yen briefly strengthened from 159.45 to 158.68 per dollar, but traders remain on high alert. The yen is approaching levels where Japan previously stepped in to stabilize its currency, and any sudden intervention of the yen could trigger volatility across global markets. So today, markets were pairing those risks. We know historically rapid yen strength has been associated with risk-off conditions due to its impact on global carry trades. On top of that, we've had Greenland trade tensions and rising geopolitical uncertainty. Geopolitical risks are also resurfacing as potential market disruptors. President Trump has ramped up rhetoric around annexing Greenland, citing national security concerns. Talks between the US, Denmark, and Greenland ended without resolutions this week. European officials have also warned that any attempt to seize the territory could damage US-EU relations, which would obviously, of course, create rattles across global markets if that were to happen. On top of all these things, we've also had a pushback on crypto regulation. Domestically, crypto markets are also facing disappointment after a key committee vote on long-awaited cryptocurrency market structure legislation was postponed. The Clarity Act, which was scheduled to move through the Senate Banking Committee this week, was delayed following a late-night policy debate and industry pullback. So with all of these things in mind, right, it is not just about the underlying fundamentals that scream bullishness, right, and these underlying digital assets, but because of the risk-off backdrop and because these risk assets, i.e. crypto, are the riskiest asset class right now on the face of this planet for global investors to invest in, when the sentiment is skewed to risk off, of course we don't see any price appreciation, right? That goes for XRP enthusiasts as well, pretty much anybody that holds these altcoins. So be mindful of this, pay attention to these things, do your research, learn where to find this stuff, be part of the right communities. Here at CYPRX, we provide all these things. We update our community with these private reports every single evening during Asia session, so that way they are in the loop with what to be mindful of and pay attention to in the days ahead, on the current day, and in weeks in advance before this data and information even comes out, right? So if you guys want access to this, you guys can always tap in with us. Head over to CYPRXtraining.com. We'd love to have you on the team, all right? So last but not least, I'll play this one clip before we roll over into the podcast with the XDC, unless Aqua has anything to share or show you guys in regards to Metallicus or the metal ecosystem, because that's what he likes to talk about and discuss. But this guy here, this is from 2 days ago, okay? Look at this. Global Blockchain Business Council. This has 42 views, okay? And this is coming from the CEO of OKX, okay? And listen to what he says about how we are early. And again, this is just recent, where he's talking at the New York Stock Exchange on this interview with this lady here. And he goes on to talk about how in January 2026, we are still early. So think about that. Think about where you're at. Think about what this guy here said, right? How if you are solely focused in this space on price appreciation as a long-term investor, and you are scared or worried about your investment because they're not performing well right now in this risk-off environment, you're here for the wrong reasons at this current moment in time, because these projects are still building. They're still building out infrastructure for the new financial system. It is coming 110%. Now is not the time to lose faith. Now is the time, ever more so, to stack more blue chip digital assets, pack your freaking bags, because once this space turns around, I have a firm belief that this depreciation that we're seeing in the total cryptocurrency market cap and in all coins across the board is probably going to be one of the last ones that we see before the rocket boosters really turn on. And when the rocket boosters really turn on and institutions really flood into this space, do you really think you are ever going to get this type of discounted opportunity again? Most likely not, right? Most likely not. That's my theory. Once these institutions come in, these low valuations that we're seeing across the board, regardless of what digital assets you favor, you're most likely not going to see them for pennies on the dollar again. So just take a second here and listen, put things into perspective on how early we are in the space from an individual with valid credentials in the ecosystem.
Now I mentioned, so you came from the financial services industry. How do you see blockchain financial services kind of melding together, working together? What will this look like for, say, the end user at some point in the future?
Well, I think a lot of products are going to sort of really get transported through public blockchains, right? That is the future. The future is where, and we are just at the start of that evolution, right? Today, we have probably around $30 to $40 billion of real world assets going through public blockchains, but that number is going to go up, right? And when that number goes up, I think a lot of traditional finance institutions are going to partner with the robust, crypto exchanges, crypto centric organizations. And that partnership will yield a lot of good results. And that's what I think. DeFi is also an important part of this journey, right? Decentralized finance. We have a lot of products being launched on DeFi today. And the DeFi market cap is also sort of really showing growth. I mean, the annual growth rate of the DeFi ecosystem is around 40 to 50%. And that is also something to keep an eye on.
So here the guy from OKX goes on to say, we are early, right? We're still seeing capital markets come on chain, and DeFi is important, right? So this dude is the CEO of OKX. I'd take a second and just, take into consideration what he says at the very beginning of 2026, that we're early, right? So hope you all have a good weekend. We streamed a couple of podcasts this week where we displayed panel discussions that are shared inside the private CYPRX Discord. Don't forget that if you guys want access to pretty much the largest research database on the face of the retail spectrum, in my personal opinion, I mean, we could debate that, but I'd go outright and say that our community has the most documents from the largest organizations, institutions, regulated entities in this space, the largest collection of podcasts and panel discussions that go relatively unnoticed. Pretty much it's an insane amount of research, non-mainstream, non-opinionated, non-biased, all the research that people should be paying attention to, all the documents people should be reading from the biggest, World Economic Forums, Bank of International Settlements, IMFs, World Bank, all of that stuff is inside the private CYPRX Discord. You guys can lock in with us in 2026. We'd love to have you on the team.